Hi, so in this session we're going to be discussing some basic fundamentals, and also I'm going to just elaborate on things like China and the geopolitical situation in the Middle East. Don't forget that we are running workshops which cover options, cover fundamentals, cover trading. That could be for beginners. There's also for intermediate and advanced. In addition to that, obviously we have the VIP mentorship group, we've got the Telegram group, and we've got books on Amazon. The next workshop is on the 19th of May. So let's kick off. Let's first of all look at a couple of fundamentals. So some of the people have been asking me, what does basic terminology mean? Like, what does non-farm payroll mean? Well, non-farm payrolls essentially is the employment number in the US. How many jobs have been created that are non-agricultural jobs? That is a measure of the overall health of the labor market in the US. And when that labor market has a full labor or reduced labor number, that could impact and affect financial markets, whether going up or down. All depends what is the economic atmosphere at the time. However, let's move on to something else. I want to talk specifically about China. So China has seen a significant contraction and a descent, shrinking in terms of its economy over the last few years. And that, especially since the pandemic and the lockdowns and the releasing of businesses, opening up the economy, it hasn't yet got back to where it was years ago. And as much as the economy is contracting, you've got falling retail sales, you've got rising youth unemployment, lower overseas production, you've got lower imports and exports, lower balance of payments, and the worst of all, you've got a massive property sector that has just turned into ghost towns. So China will impact the Western world. I've been going on about this non-stop. China also is an ally or in cahoots with Iran, because it gets its oil from Iran. China is dependent on oil imports to fuel its heavy industry and its massive industrial power. Remember, China is the number 2 global economy. It does want to become number 1, but it's unlikely it's going to pass the US near term. However, if Biden continues with his Bidenomics and he gets back into power in November 24, which would be an absolute, in my opinion, disaster for the US, then you could see China or other countries like India creeping up and taking over the US as a financial power. That is a bit of a political input, and let's focus a bit more at the moment on economic numbers. So China itself contracting, lower demand, lower retail sales, and not only that, what it's likely to do, it's going to redeem some of its overseas assets and bring them back into China, mainland, and that could cause a major problem on US Treasury bonds, because China's heavily invested in UST notes. So if China was to redeem or to sell those UST notes, that would cause a significant drop in the price, and the yields, the interest that is paid, or the yield, the return on those bonds would shoot up, causing a significant issue for the Fed and the US Treasury. That is an overall global threat financially as far as China is concerned. But the more that China goes into a descent, then there's more likelihood that extreme or critical financial action will be taken by China. What impact would that have on the US? And this is where fundamentals come into it. It's very important to understand what is fundamentally going to impact financial markets. Most traders look at analysis and look at technicals. Where's the support? Where's the resistance? How the graph is moving, whatever technical analysis you're using, whether it's Elliott wave or whether it's Bollinger or Fibonacci. But most traders are using technical analysis. Very few traders, especially retail traders, understand fundamentals. And that's where I want to come in and just teach you and get you an understanding of how to connect the dots between fundamentals, what's happening economically, geopolitically, and how does that impact the markets? That's one of the reasons we're running the workshop on the 19th of May. If you want to register for that workshop, that's fine. All you have to do is comment 19th of May and we'll get you registered as far as that's concerned. You can also follow me on Instagram. So how does China's selling of T-notes, if it does happen, impact the US? Well, what would happen is that because the yields would go up, essentially it means that any new debt issued by the US that have to start paying higher and higher interest, and that means the interest debt, which is already super high as far as the US is concerned, would be elevated even further, and that would cause a financial strain as far as the US is concerned, and that would bring down financial markets, especially something like the Nasdaq, which is heavily dependent on cheap money or lower yield. So overall, that is a danger or a red flag, to coin a term, a red flag that's waving in the air from China that could cause a financial disarray or financial disruption as far as global markets are concerned. Other thing to look at is where is gold. So gold has gone up significantly over the last 2 years. It looks like it's going to continue rising. The main buyer of gold at the moment is China, because they want to back the yuan and the BRICS, the BRICS, which is essentially the alternative to a digital currency, alternative to the dollar. They want to bring in BRICS, which would, and essentially what that would do would be in competition to the US dollar. And they want to make that gold backed. So a gold backed BRICS currency demands gold. So China, Russia, India, South Africa, or Brazil are all buying into gold to make it a gold-backed currency. That's one of the reasons why gold has shot up. So China is the biggest buyer of gold and has been the biggest buyer of gold already for some time. And that can be shown in the price, or borne out in the price. Remember, gold is a safe haven. So when you're coming to any type of crisis, any type of economic crisis, there's a rush into gold because it's a solid, rare commodity. So it's a solid, rare commodity. Maybe Bitcoin could be a safe haven. Well, in order to get more information on that, you'd have to join the workshop on the 19th of May. We can discuss that in more detail. Is Bitcoin a matching or a growing safe haven equal to gold, which at the moment is a safe haven, but Bitcoin is not yet considered a safe haven, but could grow into a safe haven as far as financial crises are concerned. Has similar characteristics. It's limited, it's liquid, it's digital, easy to move around, so it could have the characteristics of a safe haven going forward. Other things you need to look at are obviously foreign exchange. A weaker dollar, a stronger dollar, depends on where interest rates are going to be going. But I think interest rates in the US for this year are going to be trending down. So you could see the DXY, which is the dollar index, trending down over the next few months in anticipation of the Fed cutting rates. That's more or less it for now. Don't forget, the 19th of May, we've got workshops. We have continuous workshops going forward. We've got the VIT mentorship group, we've got the Telegram group, we've got one-to-ones, you've got workshops, we've got books on Amazon, and I hope you're tuning in and subscribing. If any questions whatsoever, don't forget to ask them, send me the question. I'll be more than happy to facilitate it. Have a great day.